How we doing, everybody? How we doing, Sunny? Love to hear it. Right there with you. Going on, Ricky? Welcome, everybody. Hope we all had a good day today. Oh yeah, Ricky, that was an all right one. She tends to rip the hogs. Oh yeah, I wasn't saying nothing. I was just checking some things out. We'll give it a few more minutes, let some people show up. We'll probably get rolling here in about 5 minutes or so. How's everybody's day today? We all had a good one. Welcome everybody. How we doing? A few more people rolling in. By the dip on tea, I'm just happy for once I was not in tea when it got bad news. Looks like it offered one today. I wanted to hit those earlier, the 1650, just to see if we could get that bounce over it on some cheap weeklies, which we did, and I didn't do. But right back into those previous consolidation zones that we've been working in, so really you can be long on this thing. I mean, we really did miss the entry. What up, Jack? Thanks for showing up. Looks like we missed that entry on T today. If you were going to hit it, you wanted to be down here close to this 1640 and just have that stop right below it. Otherwise, look for it to get back up here and maybe go try to fill that little gap it's got. How's everybody else's day? Hope we all had a good one. Pretty fun market lately if you've been on the right side of it. Today was just a ripper. That's a wild one. 15 points off the lows yesterday is just yeah, man. I'm curious. I mean, we're gonna get the news of what happened, and probably gonna say it's the lead cables, knowing them. But I'm just super curious what happened. That's just crazy. Yep, Jack, best stock of all time. Sure, a fun one to trade. Yeah, Sonny, I'm right there with you. Had some nice hits that could have been a whole lot nicer. So I actually called it a day a little earlier, or a little early today, just because it's been a pretty good one. Oh shit, we got Zane here. This market's been, I mean, all of 2023 was like the easiest market ever, just so technical, not, insane. Like we had some big volume, but it's just been pretty like relatively low volume for most of the year, but well, compared to the last couple of years. So yeah, it's been a super easy one to trade if you've been on the right side of it. We unfortunately the big problem we were dealing with was people traded this and this is what they knew. So it took them a long time to realize that, this is not the normal. This, what we're dealing with is the normal. Uh, and so people, a lot of people got wrecked. A lot of people tried to remain bearish, but they hopefully have turned around by now, started buying some calls. So a pretty easy dip by market over and over and over again. No denying there's like some, couple of nice shorts, September, October, but buying the dip, just winning. Oh, what we got for Treep in here? Parakeet, Minion. Patreep's probably hiding his name though, knowing that guy, dude. He's scared, he's probably iPhone guest. Okay, we'll get going here in just 1 second. Okay, welcome everybody. Thanks for being here. Dirty River. Thanks for taking time out of your day to come hang out with me for a little bit. And we're gonna talk levels and trends tonight. Two of the most, if you want to be a day trader and you aren't paying to some form of level and trend, you are pretty crazy. Doesn't matter, what you want to call it. There's all kinds of fancy names for things, but everything comes back to support, resistance, trends. Doesn't matter what you want to call them. It's what moves the market. Trends work because that's how algos work. They build into positions and sell on the way up, and then as you get a retrace back, they build back into the position and sell on the way up. So that's why a trend works for us. It's always important to note, I always try to tell people this, that an algo is not watching a 9 EMA. An algo is not watching a trend. An algo is what forms those trends. It's those high frequency firms that are forming these trends throughout the day. So they don't necessarily need to know the average price on shares over the last 45 minutes like a 9 EMA is going to tell us on that 5-minute chart. They just need to know, are they above water or are they below water on their trade? That's all they care about. And so, it works both ways. When an algo hits a trend and feels like that trend is still strong enough, buyer is still strong enough, they will get back into the trend. And so as, just a basic description, people ask a lot, how many, and before we do the charting, we're just going to talk a little bit about these things. People always ask, what is a trend? What makes a trend? How many candles have to be involved in a trend? And how I like to teach them is that you want to pick up on a new trend as quickly as you can. There's going to be multiple trends throughout a day. There's going to be trends on larger time frames. There's going to be different trends, depending, the 5-minute trend, you might be strong uptrend, daily trend might be strong down. So there's always going to be many things to consider in a trend. But what I tell people on them is you want to pick up on them as quickly as possible. And what you're looking for when you're looking for a trend or a trend reversal or anything like that, is you want, higher highs. Like right here, we have a little micro trend that forms. So we're just going to look at that. And what do we mean by a higher high? It's going to be a high that is higher than the previous high. Pretty simple. On the downside, you want to look for the things down here. Same thing, higher low. What do we mean by that? Well, we have a low here. Our next low is here. So we're looking for a higher low. And so that's all you're looking for in a trend. And what I like to tell people, because most people know I really like trading statistics in the market, things like that. What I like to tell people on trends is you want to pick them up as quickly as possible, because we can start to apply some of the statistics from the market that we know to those trends once we figure them out. And so one of them that I like to tell people frequently is 80% of breakouts fail. And that's market wide, that's trend breaks. That's, breakout upside, breakout downside, breaks over EMAs, breaks over VWAPs. So that's just a tried and true back tested statistic, very applicable to how we trade every day. And so something that I use it for specifically is trends. So I just kind of went to a day that looked like it had some form of a trend. So when I draw a trend, what I look for, and we're starting on the shorter time frames. I know most people want to day trade, and so we're going to talk about the shorter time frame trends first, and then we're going to go to the longer time frames, talk about those trends, and work into support and resistance from there. And so on these lower time frames, what I look for is I want to start my trends on the candle where we got a reversal. So this candle is great. Nice big push up that was immediately reversed on. Candle's almost twice the size of the previous one. Big, strong, bearish candle closing near its lows, small wick on the top, very bearish candle here. So reversal of trend has happened. Well, we don't have two candles to work off. Some people might try to draw this trend, and you can catch a nice little trend break here, but it's not a trade that I would like to take, because what we need in, for my rules of drawing a trend is either a higher high or a lower high, or a higher high and a higher low, or a lower high or a lower low. So that's what I look for here. We have a breakdown, and then we have a bounce up. People try to call this flags. People try to call it all those things. I don't get into the named thing. I don't trade named patterns. I don't trade named candles. You know, I mean, double bottom kind of an exception, double top an exception. But I view this as a breakdown with an attempted reversal. So we broke down, we attempted to reverse back to the upside, but we failed. As you learn candles more and more, you can kind of start to look at a candle like this and say to yourself, hey, this is likely going to be a lower high. We had strong buying that was met with finally a very aggressive sell. This is definitely a bearish candle in my book, even though it closed green. Not a candle that I like to be long on, get long on, nothing like that. So we had this candle form and we now take another reversal back down. So we have our high here. We now have a lower high. So this is our trend. And what I like to tell people is, trade this trend. Trend is now, sure, you missed a nice move, but after this bounce, you're really only missing the move of the first candle. So trend is now down. You look to short bounces. I know everybody wants to catch the bottom. A lot of people try to, predict trades, predict where things are going to go. Everybody wants to long the bottom and everybody wants to short the top. And I don't. I want to short the middle and ride it close to the lows, or I want to, long the middle and ride it close to the highs. I want the easy trade. I just want a chunk of the trade. I don't ever want, and sometimes it happens, but I'm not out there trying to be the hero that's sniping the tops and bottoms because, you're going to get wrecked most of the time. So now we have our trend. We have a lower high. That's all we need. So this is basically a trend on 2 candles. Well, now we get to take some of our statistics we know from the market into account. We know that generally speaking, 80% of breakouts fail. So it's likely not going to break on the 3rd time. So if we get we get our bounce up and then we come down and we get another retest, very, very reasonable short right here. Stop can be outside of trend or stop can be over the previous high, 20 cents a risk or whatever it is. However, this is where you want to be short. We know the trend is down. We probably have people trying to say cup and handle or something like that. And I don't trade those. We know the trend is down. You short this, stops above it. And then we sell it, get a nice sell. Well, we know that 80% of breakouts fail. Well, on this trend, we've had 1, 2, this is where it starts. So we got 1, we got 2, we got 3. We're getting to our 3rd, 4th test, depending if you count the first one. 3rd, 4th test. Now we can start to say, maybe this breakout holds. This one, the buyers finally tried, lost. But when we get the breakout here, that's where you can look to start to get into calls. Gonna hold a little bit of risk on it because you're gonna either want to stop under trend 40 cents below you or lows, which is going to be like 80 cents below you. But this is where you look to get in on this break. Then you unfortunately get shopped around on these contracts. Finally get the push though. So this is a really great example. I didn't think that my random zoom in on a day was going to be that great of a trend example. But that's how you draw any short time frame trend. You're really just looking for that lower high, or higher high. So here's another example. This is probably how I would draw this one. Here is one where our statistic didn't hold. It was able to break through on the 3rd push, offered a real great retest. This one would have been, awesome entry down here, very tight stop. The people who got in early, thought they did better than you until they got this pullback, and then you actually will likely get the better entry than the people back here trying to catch the trend break. So this is classic breakout retest. If you hear me or Flips or anybody talk about that, this is a breakout retest. I mean, don't get me wrong, it's like it's 8 cents off, but we're close enough. Perfect breakout retest to look to attempt longs. We also know this was our low, and so what are we learning about, trends here is what makes a trend is higher highs, higher lows, lower highs, lower lows. So we set a low. Well, we've set a new low here. So we are nice and aware now that this is now a higher low. So this is the trend we trade. And again, trend is up. So you know, there was big selling in the morning. I'm sure people were trying to short this the whole way up because they wanted to catch one of these. But trend is up. We've set higher lows. We've also, if you want to be technical, we're also setting higher highs up here. You can put that there if you want. I'm typically more interested in the trend that is holding us. If we're trending up, my trend's likely going to be on the bottom. If we're trending down, my trend is going to be on the top, because that's the way the market is trending. So we're buying pullbacks, buying pullbacks until buying pullbacks fails. Then, well, we aren't really supposed to talk about this in this lecture, but then we get consolidation. So any, you know, if you are still long through all this consolidation, and if you're day trading, you shouldn't be, you stop out below here if you are, you know, sure, it ends up bouncing, but you stop out here if you're able to catch this ride up. So any short time frame trend, these are the kinds of things you do. Sometimes you get a very dramatic trend reversal that doesn't leave a lot of meat on the bones for you. This is one that, you know, this did set a, you know, we had a big breakdown, gave up supports and resistance, which we're going to get into next. Had a big breakdown. However, for me, you could, if you were really reaching, call this the trend. But as you see, you end up kind of, because, you know, you have these lower high candles, but you end up getting blown out because of that. So really what I would do is I would be watching this, and, you know, I might watch this and say, nope, we're still consolidating. And unfortunately, you don't really know that you're getting the, you know, this is the retest until it's happened. So now, and, you know, we're 20 minutes into close, not a lot of meat left on the bones, a lot of risk if they decide to rip it. So not really tradable, but still creates something of a trend for us. So that is, let's see. Yeah, recording will be posted. I'm trying to do better on questions tonight. Sonny, it is easy. It's simple. That's what I want everybody to see. You guys all have, you know, most of you, Sonny, obviously been to a ton of my lectures. A bunch of you have been to a ton of my lectures. Simple is it. Simple is key, you know. Most people can identify higher highs, higher lows, lower highs, lower lows. You know, do you have a pullback with a low that is higher than your previous low? Then you got it. You can draw trends if that's all you need. Let's see, what about the red candle at 8? Well, that, oh, I wonder if that's from previous chart I was on. Oh, 7:45. Yeah, so, you know, it could be this one. It could be this one. It could be this one. What I'm, and this is getting a little bit more advanced, so I'm sorry, but I like looking at candles. Like I said, I don't like name candles. I don't like any of that. You'll see this pullback, and you might want to draw your trend like this right away, which is fine. But when you see this next candle form, and this is something I'm normally a stickler on rules, but I consider this an inside candle. I know it has overlapping wicks. Most people want the entire body and wick inside of the previous candle, but I don't. I just want all of the information of these candles inside of this one. When I see this and I see this and I see this, I consider this 2 inside candles. And now the only other thing that I'm really noting on these candles is just these wicks down here. They don't want to go below there. We can also see, if we look left, this is again more advanced price action. Looking left, this was a bit of a support that was broken and reclaimed. So we can kind of assume there is going to be some bouncing here. So when we see a couple of inside candles, that's when I look to start drawing my trends. On this day, there's a very good chance that when I drew my trend, and I don't know how it played out during the day. Like I said, I'm watching the candles. I drew it like this, likely off of this one. Then this next candle formed, but when I saw it holding the trend, my entry would be somewhere around the close of this candle, stops below these wicks, if we're looking back at this. However, once I saw how this played out, and I'm going to give a warning on this. When a trend is set, you do not adjust it, because you'll start, like, maybe you're in calls and like it's breaking down and you keep moving the trend wider and wider and wider, thinking you should stay in calls. You can't do that. However, when a trend is just forming and, you know, maybe we have our trend drawn like this, well, then we get this big breakout. All I'm going to do is I'm going to kick this out. That's all I'm going to do. And now this trend, this trend is now set. It will not be adjusted. If I'm in calls, I am stopping out on a candle close below this trend. You know, you don't want to be in calls. And I'm just going to give an example. You don't want to be in calls and then say, oh, well, actually, I'm going to use this candle. Oh, well, that's okay. And no, I'll move it to here. You know, trend is still up. Oh, no, I'm going to move it over to here. Trend is still up. And all of a sudden you're blown out. And if you're in same days, you're red. Like if you catch this whole move and then you get this dollar pullback against you, unless you're deep in the money, you're now red on the trade. And then, you know, people will try to pull this one and say, I knew it was coming, but they didn't. So for me, trend is set. It does not move. You know, that's like, it does not move. It's a rule. If you're going to trade trends, it's a rule that you really have to follow. So that's an interesting question. And I'll you know, we're getting a little too much talking on trends, but I love them. So Al Brooks, everybody knows, we got Al Brooks commenting in here saying they're guilty of doing this. So Al Brooks teaches us that there's trends all day long. He loves trends too. He doesn't draw them, you know, he's more of a visual guy, but it's important to note that the market only does two things. It trends and it ranges. And if you know, depending on the time frame, depending on blah, 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 if you gradually just draw the trends over time, you will notice that trends always gradually flatten. So, you know, this is honestly a viable trend you could draw. It gives you no meat on the bones. You missed the whole thing. You could even make an argument that now you have a trend over here, because this is from down here. And what we've learned about trends is that all a trend needs is a higher low, higher high, lower low. That's it. So technically, yes, this is another trend that you could draw. Not a very actionable trend. However, so is this. And even so is this. So we can see it in the market. The market always goes from ranging to trending back to ranging. You know, there might be reversals in there, you know, maybe it trends up and it ranges and begins to trend down, but the market will always flatten eventually, because it only does two things. It trends and it ranges. So we know trends lead to ranges and ranges lead to trends. And so that's you know, that's just it's just how the market functions. I see a question, and then after this we're getting to some longer time frame stuff as well. So this is an interesting one, because, you know, depending who you like to learn trading from and stuff, this is what you call a tight bull channel. You know, and what a tight bull channel is basically it's just two trends that are super tight. You will eventually get a climax, is what they call it, where you get a breakout that fails and you go into a range. No surprise, all trends lead to ranges. And so that's the one that you would see, not very actionable. However, this is an interesting day where big breakout. And then all I look for here is I just look at this. I basically draw my consolidation off of here. This first, you know, this was big breakout candle followed by failure candle with a whole bunch of candles trading within that range. So I hit a scalp here because I think it was we were down, opening range was probably, you know, up here or something. So I hit a scalp up to here, then another up to here. But for me, I don't really have a ton of interest in trading in a 50-cent range, you know? So the best thing to do is not really look for a trend, because when the market is ranging, it's not trending. Now, the thing that we want to look for is when, you know, we get failures, some more failures. Now, when we go like this and we actually break out and set a nice higher low, at that point, you can say that is your trend. And you're basing it off this candle and this candle, because we have a breakout that was able to sustain, pull back. So now we have a higher low. And then even if you want to get even more technical, going into that bull channel thing, we have a high, which is technically a higher high from here, but we have another higher high here. So at that point, you can very safely draw this and trade this, and, you know, be in the market and know that, you know, this was the trend to trade for the day. Breakout was nice, some nice scalps in here, but this was where you wanted to start buying some pullbacks and looking for, you know, the real move of the day, which obviously came in the latter half of the day or so. Okay, so got a little more technical than we wanted, but trends, does everybody get it? Lower highs, lower lows, higher highs, higher lows. Pretty self-explanatory. You buy dips into them, you short rips into them. That's what we want to do. Okay, so next thing that we want to do, because we've, now we've done the short time frame. So then, and this, we'll see what you guys think of how I'm planning on doing this lecture as far as layout, but whatever, we're going to go for it. So next thing that we want to do is we want to go to daily time frame. You can even go weekly time frame. If you really want to feel bad about being bearish, check out that weekly. Well, what are you doing, bears? But daily time frame. Sometimes you don't necessarily need to draw a trend. You just like look at the chart and say like, okay, who is winning? That's what we want to know. Who is winning the fight? Bulls are winning the fight, as no surprise to anybody lately. Bulls are winning the fight. However, maybe when we had this pullback, you wanted to start, looking for some sort of a trade. That September, October pullback. Maybe you want to start looking for some sort of a trade. I'm not trying to tell you to snipe bottoms. I'm not trying to tell you to do anything like that, but let's look for some trends we could have been trading back then. One major one right here. Well, that didn't line up very good. One major one right here. We had a high, we have a lower high. Not super dramatic, $5, something like that. But first lower high we had set in quite some time on the market. So at this point, shortable anywhere up here near this trend. Ended up lining up at 450. This was a nice short, but shortable right here. So we've also set new low here. Next one we want to look for is we want to look for some new lows down here. So this is a trade that actually me and my buddy Vern in here, he's unfortunately not as active as he used to be. He got a real job, so he's been doing that a lot. However, this was something that we were both watching. Market likes to test things 3 or 4 times before it does something. And on these larger time frames, something that the market really likes to do is fake you out. So that's what we had going on here. Him and I were talking, it's in trade floor, we got timestamps on it somewhere over here saying, and we referred to it as a 3 push wedge. That's what this guy we both trade, that's what Al Brooks says. So you look for a 3 push wedge where you get, this could be 2 touches, which helps us with our 80% statistic. We got our 1, 2, 3, 4th touch going on here. It's make or break right there. But we were talking somewhere around here. Look for that 3 push wedge, look for the fake breakdown, and then try to catch that bounce to the upside. Of course, there was no reason to expect a basically $100 run now at this point. That's impressive. No reason to expect something like that, but a really nice low risk, high reward place to take a stab on the trade. Again, break out a trend up here. There was even, I know somebody sent me this trend, gapped that trend as well, but at that point, very, very easy to be looking long on the market again. Well, somebody was asking me, and this is why I wanted to go here, go to the daily. Somebody was asking me, I get that the market is trending up, but where is the trend? Like what is the trend? Because people keep saying our market doesn't pull back, and they're ignoring like the ample consolidation we have had through this run. They're ignoring that side of it too. And as we learned, market trends, consolidates, trends, consolidates, trends. So we always want consolidation because it fuels runs, but somebody was asking me, and this is, in my opinion, the daily trend that we're working with. And there's an interesting thing to note right there. So this was our higher low. It could have been this one, but this is another one of those situations where on a daily time frame, you bump that to where you actually get the bounce. You want accuracy, and so this was a really interesting one to note on this sell-off. Any sell-off we've got since this was set, we've been able to bounce it. We've been able to bounce it. We've been able to bounce it. Yesterday was a little touch and go. It was that first day of us really trading below that trend that we have been in an extremely strong uptrend for 4 months now. It was it was the first sign of like, uh-oh, what's going to happen? And then obviously, huge buying into close, obviously a short covering rally into what ended up being big earnings and a big gap up in the market. And so the trend held yet again. So that's the trend we watch. Trend is still up. Obviously, as we know with trends, there's always a top side to it as well. And so it's hard with this dramatic of a move when you just go vertical. You really want to look for consolidation, and there's nothing that I can see drawing a trend on until we get to here. And then to me, I'm looking where we rejected previously. You could have had this one drawn, but that was, gave us a nice explosion already. So really, that's the next trend you have your eye on, which we got pretty dang close to touching today. I'm not saying it's short tomorrow, obviously. Puts her a waste of time. But have your eye on this trend going into tomorrow. Well, trends are great. You can kind of base some of your longer term trades off of them. They tell you the direction of the market. They can give you some ideas of what's going on. I guess one more little thing I should point out is, there's multiple trends as we talked on the long time frames. There's also always little micro trends in some daily time frames. You can always look for smaller trends. Even, on these pullbacks, you can like look for this sort of a trend. You can look for something like this sort of a trend and try to catch those bounces, but you always need to remain aware of what the whole market is doing. So trends all over, always trade around them, and use them as confirmation for your trades. If you're short and trends are breaking upside, get out. If you're long and trends are breaking downside, get out. Pretty simple. So what's the next best thing we can use to understand, do I want to get into a trade? I have my trends, so I know what way the market's going, so I can have some rough ideas of, I want to buy pullbacks, but you can't really just trade a trend. You need to have some more context of what the market might want to do, areas that you're trading in. And so obviously that's support and resistance. So that's what we're going to talk now. And I'm going to tell you how to get your most important, in my opinion, your most important levels. And I should, say my usual disclaimer for when I do this class. There's like a million ways to chart support and resistance wrong, or just chart support and resistance, and none of them are wrong. So I'm going to show you how I chart it. And now that I think about it, I actually had something else that I wanted to point out on my trends that I should have done at the very beginning, but I didn't. You might have noticed when I draw a trend, I always draw it off the wick. And what I mean by that is when I'm drawing a trend, whatever the trend may be, I'm starting it at the bottom of this wick and I'm connecting them up to the wick. And why do I do it at the wick? Because that is where the other side gave up. So that's what I'm most interested in. Where candles close, where candles open, obviously have their own role in day trading. And that will be, we'll even talk a little bit about that in the support and resistance part of this class. But on a trend, we know that the other side completely gave up. And so that's where we want to know what they gave up here before. So if we're selling down into a trend, or we're selling into a trend, I know that, well, they gave up once before at this trend. They just might want to give it up again at this trend. So I think this was FOMC day, so kind of bad example, but this was no technical sell-off, maybe CPI, PPI, who knows, something like that. Beautiful bounce off the trend. Tried to break the trend, bought back over it. Again, tried to break the trend, bought back over it. So we always know, we want to know where did the other side give up, because we want everything in our favor. And if they gave up there once, maybe they'll do it again, twice, 3, 4 times, but maybe not the 5th time. That goes back to our statistic, And so that brings us to support and resistance, which I had the exact same feelings on. Any daily time frames, daily, 5-minute, any of those time frames that I'm finding levels on, I want the wick. because the wick tells me where that other side gave up. And so that's where I'm always going to be most interested in putting a level if I think it matters. There's times where you'll get consolidation like this. Yeah, obviously don't want to be marking all of these wicks. I'll show you how I like to chart consolidation areas like this, and we will normally do it looking back so that if we ever trade those levels again, we can use them going forward. But let's look at SPY and where we're trading. It's tricky. We're just setting new all-time highs like every few days over and over again. So when I go looking for levels, doesn't matter if we're at all-time highs or all-time lows, I'm going to do the same thing. I'm going to look for what I call dramatic bounces or rejections. And so what do I mean by that? Well, this one right here, SPY sold 503 down to 490, 13 bucks in a couple of days. And then it stopped. And maybe we had news, maybe we had, who knows what's going on. However, I know that this candle low was 490.72. If we come back to 490.72, I can very, very likely expect some sort of reaction. Whether it's explosive breakdown or explosive bounce, doesn't matter to me, but I can plan on something happening there. Again, yesterday, I want yesterday's low. We know that a good part of that was shorts covering into big ERs, and you don't want that kind of exposure into the market or anything like that with unknowns coming. But 493.57 comes into play again. I'm going to be very, very interested in it. Next place I'm going to look, because these candles, I'm not so interested in them. I want the reversals. Next place I'm going to look is going to be right up here, because I want this top where we rejected down. Maybe it was technical, maybe it wasn't technical. Obviously, we fell a little bit short. But I want to be close to this top because I want to know if we're trading there and see how that market is going to react again. Because at one point, this was a solid green candle pushing up, and then it rejected down heavily and ended up selling off for a few days. So I want to take note of that. This wick, we're going to mark right now. And so I'm showing you this for a reason. We're going to mark it right now because it's previous all-time high. Obviously, we set a new one today. That was only a week ago we were setting that one. But I want to be aware of that. And that previous all-time high resulted in a pretty nasty rejection. And so that's how I'm going to look for any sort of level. This is another one. And I'm marking this Y because the buyers gave up. And then at some point during the next day, the market was down $7 from these highs. So I want to be aware of that, and then when we're trading at all-time highs, it gets tricky. But the main things that I'm going to look for, and because you can see right here we have $6 between these levels. We know that there's absolutely support and resistance in that area. We just haven't built it on the daily time frame yet. But the one level we want to put on here, 500, whether it's psychological or it's technical or whatever, it doesn't matter. Whole numbers will always matter on a chart. So we want to have these kinds of prices on the chart. And then we're just going to look, not necessarily for levels that we care about right now or anything like that, more as a demonstration. Because we have some levels that we can trade around up here now. But how do I do this big picture? When, somebody asks me on Trade4 or whatever, what do you think of this stock? This is what I do. I look for these dramatic lows and mark them. We can see even this level, it was, this sell-off was perfect to here. I think we even talked that one in class, that FOMC sell-off. Then I want to just look for any places where we had big rejections. Big rejection here ended up working again. Anywhere we had big bounces. This is how I find all of my major levels on any chart. Even right here, we ended up dropping, $7 from there. I want to take note of those things. Right here, we had a big sell-off again, $8 sell off that time, that was met with a $12 bounce over the next 3 days. I want to always take note of that. And so you don't want your charts getting too cluttered. You don't want any of that stuff, but you always want to be aware of dramatic highs, any of these highs. You want to take note of this. Any of these lows, you want to take note of these levels. That's, how people end up getting stuck short in the bottom. So the next thing that we want to talk about is consolidation ranges. And the best way to think of consolidation is that it's stuck between two levels. That's all consolidation is. And we know that that's just support and resistance. So this is one right here. I remember that when this was going on, into December, kind of that low volume, end of November into December, low volume time of year, people getting throttled, looking for the big moves. You want to always be aware that we're consolidating. You don't know it here, but as soon as we've set this low and this high, now you know that we are in a $5 range. Until we're out of that range, we're in a $5 range. We obviously have support and resistance levels that line up really nice with this, but you always want to be aware of, is the market ranging? That's something, we keep having people on Trade Floor screaming, oh, the market doesn't pull back, this market's fake, whatever they're saying. They're ignoring that the market is functioning, basically exactly how it should. The market loves to function consolidation into trend. You can even make an argument for some consolidation here into trend, consolidation into trend, consolidation after a gigantic move into explosive move upside, consolidation. This is what the market will always do. Maybe the consolidation lasts 3 days. Maybe the consolidation lasts a week, 2 weeks, whatever it is. But all the consolidation is being stuck between two zones, or two levels. So how do we want to trade something like that? Well, we want to be long at the bottom of consolidation areas. Or let me rephrase, market trending up, we are long at the bottom of consolidation areas. And we don't necessarily, you can be short at them, but you need at the tops, but you need to have your stops tight. However, market trending down, the opposite situation. If the market is trending down and we're in consolidation, you can long the bottom to try to get some bounces. However, you want to be short at the top of consolidation in a downtrend. Whereas on the other side, you don't necessarily want to be short at the top, but you do want to be long at the bottom. So it just keeps it nice and simple for us. So now we know how to find support and resistance. Now we know how to trade support and resistance. We know most breakouts fail. That's why you always want to be trimming at these support and resistance levels. Well, now we can take it into some shorter time frame stuff. We have all of our daily levels. Yeah, can I repeat that? For sure. We'll go back. So market, I'm just going to explain it all again. So market is trending up. Granted, we didn't necessarily know the trend looked like this at the time, but market is going up. When we consolidate, you definitely want to be long at the bottom of consolidation, assuming that it won't break down because the market is strong. So if you are long, your stops are just below it. You don't necessarily want to be short at the top when the market is strong. Can it pay very, very well? Yes. I use it in the opening range strategy all the time. Short the tops, long the bottoms. But you want to be cautious when the market is trending up, being short at the top. As we've watched in Trade Floor, bears get slaughtered when they're wrong and bulls get slaughtered when they're wrong. So market trending up, long at the bottom of consolidation. And can risk it, but it's risky to be short. Market over here, on the other hand, trending down, however you draw it, market trending down, when you find consolidation, you want to be short at the top of the consolidation. You can be long at the bottom, but you're long in a downtrending market, so you need to be cautious of those stops. So now that we have all that, we go into the short time frames. And now we have our levels and we have some, things to trade around, areas that we think will matter. And so if let's get a few more days on here. So if we're trading the market and we don't, here we go, here's a good day. No, well, this is kind of a good day. It'll make people mad probably. So market is trending up. We know that. But we don't have any levels right here. So we know we can be looking to buy dips, but how can we get some levels in here? And so what we do, and what I recommend everybody does for any trading, what I always say is, if you want to know what the chart is going to do to the right, look to the left, because it trends or it ranges. So we know that it will likely continue. Well, we don't have any levels to trade around. So we can say, oh, market's going up, buy the dip. That's useless if you don't know. If you're buying in no man's land and you're just, trying to buy every red candle, you're going to get smoked. So how do we work with that? If we're going into this day trading, which ended up being a pain for people, we're going to look here and we're going to say, okay, we have a previous day low of day right here. You might hear me or people talk about that. All it is support or resistance. It is the low of the previous day. So I'm going to label it just so we can remember what it is. And then up here, we had the previous day's high of day. All these are support and resistance levels. It's the lowest low and the highest high. Well, the next thing we want to look for, let's see. The next thing we want to look for, you hear a lot of us talk about it, the pre-market highs and the pre-market lows. And so some people do this different, they'll do after hours and they'll do pre-market. I personally don't. I want the lowest low. So we're going to put this one here, PM low. And I want the highest high, which I don't know, maybe it looks like that. We're going to put it right there. And this is going to be pre-market high. And so now we have levels in an area that we had no levels in. And maybe these levels will work the next day, maybe they won't. I personally don't delete them. However, we have all of these levels, from the previous day, as well as our one big daily level right here that we have. I labeled everything else. Well, now we can go into the next day and we can see market consolidated between pre-market high and pre-market low. So we've now learned that all that means is we are consolidating. So on these shorter time frames, because we know, our rule is 80% of breakouts fail. So if we're in a range, we want to be long at the bottom of this range. And buying calls at pre-market low makes perfect sense. Buying puts at pre-market high makes perfect sense. So this was a day where market consolidated very, very heavily. The people buying the dips down to pre-market low, we had our level, you won't always have a nice daily level there, but we had our pre-market low. This offers a basically no risk $1.20 move up reward trade. So you buy that dip, you buy these dips down to it. Then if you get that push back up to pre-market high, or near it, you short it. You push back up, you short it. You push back up, you short it, and you get stopped out. And then you're sad like 15 minutes later because you were printing, but that's what you do. And you just hammer it and hammer it and hammer it until it doesn't work. And so you can do this on, other than we had these like wild big trend days like we had today, the only way to get levels today was run some fibs. In my opinion, that was the safest way to go about it. But let's see if we just zoom out, pick another random day. Well, we already had our daily levels. We're going to pretend that day hasn't happened yet. And we're just going to go right back here. And we're going to look at this day. And so we're going to do the same thing. We're going to mark this previous low a day. We're going to mark this previous high of day. And we happen to have 500 plus a big daily, which is, big daily level right in the middle, some daily levels overhead. But we also want to mark our pre-market low right here. I should have been labeling these. I forgot. Pre-market low and pre-market high, pre-market high. So we know trend is overall up. You know, in the market, we're coming into this day. We have our pre-market low right here. We know you don't necessarily want to be short at pre-market low. You want to wait for a break at pre-market low, but maybe you don't get this entry. Well, now we get to use our levels. We have pre-market high, and we have 501.68. And where did we get that? We got that from the daily time frame. So we've had consolidation in the morning. We have now had a breakout. So what do we have? We have a trend, because the market, even though they're only individual candles, we just kind of have to draw it this way. I'm actually liking this example so you can see it. We just have to draw it this way. We are technically setting, every candle is setting a higher high and a higher low. Of course, we prefer more dramatic ones, but we get to see the trend set. We get to see our levels break. We now dip buy. And we get the nice push in the breakout to our first level. We get the nice breakout to our second level, where the day ultimately ends, fizzles out, and sells off. These can work the exact same way. Trend is up. We have now broken down. No questions asked. Even if we want, just to go back to, you know, more support, resistance, consolidation area. Oops, not arrows. We don't want arrows. Support, resistance, basically just a consolidation zone. Break down, you can short this. You're risking these lows right here as, you know, potentially bouncing you, but you can short this, or this one gives you that bounce back up. You can short this right back down to our levels. Pre-market highs, you obviously want to be trimming because we assume we won't break below pre-market high, but you get the nice death candle that pays you really well. So levels work both ways. If you are long, you want to be trimming at them, and you want to be moving your stops up to these levels as you know, reach your targets. Even if you just get nice pushes, bump those stops up. Then you get a nice push up, trim, nice push up, trim, stop is here. You get stopped out on what ends up being the trend breakdown candle. So support, resistance, and trends is what you can trade them all day, every day. You know, flips, a lot of people say, you know, he trades a lot of intraday levels. He obviously has daily levels as well, but he trades a lot of intraday levels as well. And so this might be an example right here where he would say, if we can break 501.48 and pre-market high, buy calls. That is what he would tell you. And then people would be like, oh my God, you know, how'd you get those levels? Well, he got them from pre-market high, and he got it from these previous highs right here. Had consolidation, broke the consolidation to the upside. So very simple. We're just looking for those highs and lows, you know, the dramatic highs and lows on the daily time frame, which we found out here. We get a few extras that will likely be removed because of this all-time high consolidation we have. But look for those dramatic highs and lows and just trade off of them. They'll work for you over and over and over again. And then draw trends. You know, if you see a trend breaking, you can, you know, always consult a longer sort of time frame if you want. If you see a trend break somewhere that you're interested in trading, trade it. You know, pull that trigger. It's all we can do. You could have had an hourly trend like this. You could have even had this one, which ended up getting a little blown out for my liking. Could have had an hourly trend like this, just kind of connecting some of those hourly highs on it. Could have even gone to the 4 hour. And there was absolutely, no matter what anybody wants to tell you, nothing technical about this breakout. This was 100% news driven. This was no, you know, support bounce. Like, it does, I don't care that the 4 hour candle bounced it perfect. It had nothing to do with technicals, you know. Even this one gave a really nice retest on the 4 hour. So always just consult those longer time frames. Look for your dramatic lower highs, lower lows, whatever they are, higher highs, higher lows, and trade those accordingly. So that's it. Really, we got 5 minutes for questions and everything. Hopefully we got most questions answered, but if anybody's got any questions, let me know. If I went too fast on anything, didn't show enough examples, we can go over them now. Yeah, right on. Thank you, everybody. Thank you. No guarantees on it getting posted tonight. Joe will get it posted as fast as he can, but you know, I'm not gonna bug him to do it. He's a family man and all, you know. Nice, nice. Okay, happy everybody got it. Apple. Apple's what I got my eye on because Apple is just due for a rip. I mean, everybody was bearish on it at like a quadruple bottom, and then uh this. So I love moving averages. You know, I love EMAs and SMAs as well. The 200 is gigantic. It gave it up, which a lot of people had their eyes on. This was like everybody was trying to short Apple here, short Apple here, short Apple here. No reason. When we got that break below the 200, very, very viable short. But right here, this candle told you the story. The sellers were not. This is a very bullish candle, followed by another very bullish candle yesterday on that close. So reversal was brewing, and the market doesn't like to be below the 200. You know, these big names, like you can even see this one after that, like earnings. I mean, big names don't like to trade below their daily 200. I'm sure the weekly was way below us, yeah. But big names do not like to trade below that daily 200 SMA. So now for me, what I really got on watch is hopefully this trend 185 break, looking to get long on it. I mean, I'd love a little break and pull back to here. We'll see if it comes. But I think Apple's a buy all the way down to like 184 if we get this breakout and it pulls back. So Apple's definitely one I got my eye on. What I expect for tomorrow? Who knows? When you have a day like today, there's really no telling. I mean, I wouldn't be like entirely surprised to see a bit of consolidation. But we got a nice range to trade in just from today. You know, so we can be trying to buy dips down here at 504 or something like that if we get it, or if we could try to get that all-time high break, you can always try to play those as well. Google, what's it doing, man? That chart, it's just not it for me. Like this is like not it. I don't know. It looks like it failed to break out too. I mean, I like Google, but like this has just been like I've been trying to catch this upside move and this gap fill for like, I mean, this whole time, 3 weeks now. I missed this day, of course. But Google needs to get it together, get over that 146. Right on, Bob. Happy, appreciate it. Do I believe in pre-market high next day when news is crazy? Yeah, you have to. Yeah, I mean, it's not something that you believe in. Like pre-market high isn't something that you do or don't believe in. You put it on your chart every day and you trade accordingly because it 100% will matter because you know that movement that's happening in the after hours. I've never quite understood how people can ignore it. There are many, many days in the market that pre-market high and low are the two most important levels on a chart. Tesla, yeah, that thing looks horrible. I would not. I know everybody. That's another one everybody wants to like catch the move on, but like, I'm sorry, people are just getting smoked on this thing over and over and over again. There's just a million better things to trade right now. You know, and Tesla's got these big momentum runs going. It's awesome, but when it's like up for a couple days but getting clobbered the whole time, it's like, I mean, this isn't a nice place to trade. I know like Shark's long on it or whatever, so we're probably going to finally get like an explosion, you know, finish that gap fill. But I don't know. Tesla holds little to no interest to me right now. I mean, it is technically, as we just learned in class, trending up now. Trend is reversed on Tesla, I guess. I'm still not like, I still have no interest in trading it really though. But if this breaks down, it could get selling. Bullish candle on the last one. I wonder what I was looking at. Google, this one. Yes, but teetering on no. I mean, it is bullish because obviously the buyers showed up and kicked some butt today on Google, closed above the midpoint, which is something I like to look for. But really, this isn't like I'm sure people are like it's hammering or something, but like it's not as bullish. This to me, funny enough, is a bit more bullish. People probably say it's like a dragonfly doji or something that signals a reversal, but like you get doji, there's no telling what they do. But I like this, you know, like I like big old buy up. Like, you know, you want to see one side like this day. Like this was an easy one. I might even swung long on this day on Google because like shorts got obliterated, and like at one point this was a very bearish day, and then less so. This today on Google was like, I mean, a like huge gap up, just like everything, and then just couldn't get it together, which could be a good sign that it's a laggard for tomorrow, or it could be a sign that it wants to sell some more. AMD still just in it, insane move. I mean, if you caught this move, congratulations for sure. Great place to get long that day before, on that thing. Would have got stopped out the next day though. But longs at the bottom of that zone been paying. But for me, this 180, all the way up to 184, I'm cautious up here long. I'd be looking for a dip back down, hopefully. Tesla weekly bearish. I mean, yeah, everything about it's in a strong downtrend. There's nothing about this trade that I like. I mean, I'm sure people are trying to call this a bear flag, but you're playing with fire if you're trying to trade a bear flag on the weekly, But yeah, I mean, I'm always bearish on Tesla, no matter what. Okay, well, if that is going to do it, thank you everybody so much for coming. Great turnout tonight. Great questions. Hopefully we got it all covered. Thanks for being here. If not, feel free to shoot me any DMs or anything and let me know how I can help you out. 2 to 17. Yeah, right on. Thank you, everyone. Thank you, Kelly. Yep. Thank you all so much. And we will call it here. Thank you. And tomorrow's Friday. Everybody trade safe, have some fun, and we'll catch you later.